SpaceX just pulled its $1 trillion revenue target forward by a full year on its first ever earnings call. And that is not even the most consequential thing that happened this week. Revenue up 92% year over year, $7.8 billion in a single quarter. The stock fell after hours, and most coverage spent the day debating subscriber numbers and the lockup expiration. They missed what actually matters. The earnings report didn't just show how SpaceX performed last quarter. It showed how fast the overall plan can now move, and what it can now afford to do simultaneously that it couldn't before. Start with Starlink. 12 million subscribers at the end of the quarter, double the number from a year earlier. The connectivity segment produced $4.3 billion in revenue with $1.66 billion in operating profit. That operating profit number changes everything. Starlink is now a profitable cash engine, generating $1.66 billion in operating income per quarter, not projected, not modeled, delivered. The hardest parts of building multiplanetary infrastructure, Starship development, orbital compute, AI at scale, all require sustained capital over many years. Under the old model, that capital had to be raised externally. Every major fundraise took time, required favorable market conditions, and diluted the mission with investor expectations. Starlink ended that dependency. SpaceX now generates over $1.5 billion in operating profit from a single division every quarter, and can use that cash to fund the hardest parts of the plan without waiting for anyone's permission or market conditions to cooperate. The AI segment generated $2.56 billion in revenue this quarter, up 247% year over year. SpaceX is renting its AI compute infrastructure to Anthropic and Google. Two of the most well-funded AI companies on Earth are paying SpaceX to run their models on SpaceX hardware. Let that land. The company founded to send humans to Mars is now a landlord for the AI companies competing to build artificial general intelligence. SpaceX also closed $14.1 billion in new cloud services agreements this quarter. In just the first few weeks of the current quarter alone, an additional $6.7 billion was contracted. When two segments of the same company simultaneously produce cash, one from connectivity, one from AI compute, multiple bets can run in parallel rather than sequentially. That compresses timelines in a way that external capital never could. Here is the detail almost nobody covering this earnings report has explained clearly. Power and cooling are the two biggest constraints on terrestrial AI data centers right now. The reason utilities are requesting billions in rate hikes is because AI compute on the ground requires enormous continuous electricity and cooling systems that consume billions of gallons of water. Space solves both problems simultaneously. Continuous direct solar power, no weather, no night, no grid dependency. Radiative cooling, heat dissipated directly into the coldness of space with no water required. SpaceX is already generating AI revenue from ground-based compute. It also owns the rockets and satellite platforms required to eventually move that compute into orbit. The same earnings report that shows AI revenue today also funds the orbital compute infrastructure of the future. No other AI company on Earth can replicate that vertical integration. But that is still not the most surprising move SpaceX made this week. SpaceX announced it will acquire Cursor, the AI coding platform, for $60 billion. That is the largest acquisition ever of a venture-backed startup in history. Cursor raised $3.38 billion since 2022. SpaceX is paying 15 times revenue. But here is what actually happened strategically. Cursor's market share fell from 41% to 26%, even as revenue grew. Google, Microsoft, and Amazon were all competing to absorb it. SpaceX moved first. The acquisition removes the leading independent AI coding platform from the open market, adds $4 billion in annualized recurring revenue, and prevents any competitor from gaining that distribution. The CFO confirmed the $100 billion annualized revenue target assumes Cursor contributions. This is the same SpaceX that 2 months ago was a private rocket company. For 20 years, the hardest constraint was sequencing. You moved to the next stage only when the previous stage generated enough capital. Every delay compounded. That constraint has structurally loosened. Starlink, $1.66 billion in operating profit per quarter. AI compute, $2.56 billion in revenue, growing 247%. Cursor, $4 billion in annualized recurring revenue incoming. Starshield, $6 billion in government contracts. Cash balance, $93.5 billion post-IPO. 5 revenue streams, all generating simultaneously, all funding the same plan. The $1 trillion revenue target pulled forward from 2031 to 2030 is not a marketing statement. It is the mathematical consequence of 5 simultaneous engines replacing a single sequential funding model. The risks are real. Starship still needs to achieve full and rapid reusability at high flight rates. 2 successful Starship 5, 3 tests in the last 90 days is progress, not proof. AI competition is intense, and Cursor's market share was declining even as revenue grew. The $18.4 billion quarterly capex, with $15.83 billion directed specifically at AI infrastructure, requires sustained revenue growth to justify. Customer concentration in the early large compute deals matters. Execution risk has not disappeared, but the structure of the constraint has fundamentally changed. For the first time, SpaceX does not have to choose which bets to fund. It can run them all. This is what the financial engine of a civilization-scale plan looks like when it starts working. The rockets, the robots, the underground infrastructure, the AI and consciousness, all of it requires sustained capital over decades. That capital is now being generated internally for the first time. SpaceX's first earnings report told you something more important than last quarter's numbers. It told you how fast the plan can now move. Starlink profitable, AI generating billions. Cursor acquired, Starshield contracted. $93 billion in cash on the balance sheet. 5 engines running simultaneously for the first time. Watch the next 4 quarters, not for revenue beats, but for Starship flight rates, Cursor revenue scaling, and whether orbital compute moves from concept to commercial reality. Those 3 data points will tell you whether the $1 trillion target is visionary or just a number someone said on an earnings call. This is gated. Subscribe. The next door opens soon.